Some crazy news in the bond markets. Apparently, the country of Colombia is borrowing in Swiss francs. With interest rates soaring at home, Colombia is turning to an old school financial trick, issuing something called Eurobonds to lower its borrowing costs. Now, don't be fooled by the name, okay? Eurobonds aren't necessarily bonds denominated in euros. They're just debt issued in a foreign currency other than your own. It's a way for emerging markets, say, to tap cheaper money abroad. So instead of paying nearly 10% to borrow in pesos for 2 years, Colombia is now raising money in Swiss francs, where rates are basically zero, to pay off more expensive debt they already have outstanding. Well, wait a minute. Does that sound familiar? We've got a debt problem in the US, and we've got pundits and presidents alike clamoring for lower interest rates. So shouldn't the US do the same and refinance our $36 trillion debt in Swiss francs or yen? Sounds smart, right? Well, not so fast. That would expose us to major risks. Exchange rate swings, a loss of control over our monetary policy, and potentially a wholesale collapse of global confidence in the dollar itself. When you borrow in another currency, you expose yourself to FX risk, the difference in value of your currency versus theirs. If their currency appreciates relative to yours, it becomes more expensive to pay off your debts. And that's before any change in interest rates. And guess what? Higher currencies tend to be accompanied by higher interest rates. You're taking on refinancing risk where you are exposed to multiple variables that you can't control. But above all that, there's the simple fact that the US borrows in dollars because the world wants dollars. We take for granted the privilege of being able to issue massive amounts of debt in our own currency, which we can theoretically pay off by simply printing more dollars. Colombia's strategy of Eurobonds, it's a bold and maybe necessary band-aid on a much bigger issue that they have. But for the US, the fix for our debt burden doesn't lie in foreign currencies. It's about fiscal discipline, smart policy, and giving investors a good reason to take us at our word. Strategies like issuing Eurobonds can buy you time, but they aren't a substitute for long-term solutions.